Personal finance segment 150. Faye D'Souza is ready. Good afternoon.
Good afternoon, Nikunj. A wonderful way the market's going right now, and obviously
80.96 is, by the way, where we're at. So just 4 points away, literally, from the 8100
on Thursday when we went home, we were nowhere close to 8,000.
What a great way to start today. Anyways, so the point is, obviously there are a lot of people, and we know retail participation has not been great. There are a lot of people who want to know if they can start now. And if you're a long-term investor, in my book, it's never too late. So let's find out how to go about it. If you're going to start now, when the market is so close to 8100, I'm going to bring in Dhirendra Kumar to give us some advice on how to go about it. Dhirendra, lots of investors worried that they might be missing the bus. I want to first understand from you what you expect from the market. How long do you expect this performance to continue for?
Yes, once the market actually attains a high and an all-time high, after that it can, any nominal gain will also translate into another all-time high. So I don't think investors can really, think in terms of an all-time high is not a great time to buy, or an all-time high is the market is no longer cheap. And I think it's a futile exercise, trying to guess, if the market is high or low, because last year, if most investors were not investing in the market because market was slipping down, and it was the fourth successive year for the market when the market, one could not generate any meaningful return from the market. Now the market has attained a new high in the last 4 or 5 months, and by the day it is touching another high. So if you keep waiting, you will never be able to get into the market, and you will not be able to benefit from it. So the way to approach it will be, be guided by your own needs, be guided by your own goals, and nothing else. The state of the market will always be in such a state, either falling freely or going up dramatically, and sometimes looking very expensive, sometimes looking very cheap but very scary because it keeps falling. So if you try and time it and try and benefit from that and not have the objectivity, which is basically being guided by your own goals, you will be only on the sidelines.
But Dhirendra, tell us this, what should investors who want to get in at this point do now? Would you like them to just start a small SIP? A lot of them might have some savings in their bank accounts because they were in cash. Should they put that money in? Give us a roadmap of how we should do this.
One is that investors who want to get in now should not be getting in because the market has gone up. They should be getting in for many other reasons. One is that equities generates superior return in the long term, which means if you have money for the long term, then you should consider equity. And knowing what buying what you know, and if you don't know what you buy, if you don't know what you're buying, then consider a mutual fund. And because the state of the market is such that don't invest lump sum. And if you do these 2-3 things, which means your long-term money finding its way into equity, you want to buy stocks, by all means, but you must know what you're buying and the reason why you're buying it. If you don't know, consider a fund. Consider a fund and don't invest lump sum. Spread it over a period of time, and you should be fine. If you invest in a not so great equity fund for a 5-year term, 10-year term, I don't think you are likely to be disappointed. But if you invest a large amount in a stock or a fund with a short-term expectation, you are very likely to be disappointed. Most of the big mistakes by investors are committed in a market like this.
But what sort of funds should we invest in at this point, Dhirendra? We know that small caps and mid caps have been doing really well. Is that a reason to be investing in those funds? What sort of funds would you like to have us choose?
No, this is a tricky question. It entirely depends on what kind of investor you are, what kind of experience you had. Thinking of a first-time investor who is getting attracted to the market, consider a balanced fund. Of course, the earlier 2 rules also apply, that you are not investing lump sum and you are not investing your short-term money into it. So don't try to benefit in the short run from this market. It can be very disappointing. So consider a balanced fund if you have never invested in the market. If you have invested before and you have experienced it, still I would say, and if you have lump sum money to invest, still I would suggest that you resist your temptation to invest at one go. Spread it over the next 3 to 6 months. Assuming you have 5 lakh rupees to invest, consider a diversified equity fund. Spread it over the next 6 months. Don't try to take this bet, because the risk of catching a market high has a disproportionate impact on your investing behavior. So to guard that and to develop a belief in this framework, I think it is very important to invest, spread your money. If you understand the risk of mid and small cap funds, by all means, your long-term money, a good part of it, and if you want it to grow aggressively, by all means consider it. But I would still suggest that, investors will be better off keeping away from thematic funds, sectoral funds, or, the micro-cap funds, which I would say that, right now, looking at the recent performance, they might look very impressive, but they can be very disappointed very quickly.
But then there are a lot of analysts also that are expecting, like you said, some sort of a correction going forward, at least a small correction. Do you want us to wait until that correction happens and then start investing, or should we invest at this point?
I don't think, it's worthwhile. It's a futile exercise, because if you wait for the correction to invest, then you'll keep waiting, because most investors waited last year while it was correcting, and it was correcting relentlessly. So I would say that it's not possible. And if you can, by all means, it can be very profitable, but I don't think it is possible for investors